Spoločnosť s ručením, obmedzeným is a separate legal entity usually formed for the purpose of doing business. We know it under the abbreviation s.r.o. or SPOL. In English-speaking countries, its equivalent is called Limited Liability Company, with the abbreviations LLC or LTD. The biggest advantage of an LTD is mainly that as a separate entity, it has assets separate from those of its founders. Thus, they're not liable for any debts of their company, and they don't lose their assets in case of problems. In Slovakia, one or up to 50 persons can set up an LTD at a time. These persons can either be physical entities, like people, but also other legal entities. For example, another Slovak or foreign company, municipality, civil association, etc. If a company is founded by one person, we say that it's a single-person LTD. For more on the one-person LTD and its differences, see the video How a One-Person LTD Works. Anyone doing business through a company should always bear in mind that, unlike a sole trader, the company formed is not me. It's a completely different, new legal entity, which has separate management, rights, and obligations from its founders or directors. Therefore, for example, the company's finances belong neither to the shareholder nor to the managing director, but to the company. The managing director, on the other hand, is legally responsible for their prudent management for the benefit of the company and not for his own benefit. This is one of the fundamental differences in comparison with sole trading. How an LTD is formed. The founders or future shareholders sign a memorandum of association, thus founding the company. However, the company cannot yet carry out business activities because it has not yet been legally established. In order for a company to start a business, it needs to be registered, that is, enrolled into the commercial register. This is true even when the company obtains a business license before registration in the commercial register. Persons who establish an LTD are called founders and later, after the registration of the company, shareholders. Upon registration, the company automatically receives an ICO number, or Organization Identification Number, and within 30 days of registration, a DIC Tax Identification Number for income tax. After incorporation, the company is not automatically subject to VAT. It has to register itself for it. Shared capital and shareholders' contributions. When signing the Memorandum of Association, the founders agree on the capital the new company will need to get off the ground. They thus determine the company's share capital. At the same time, they agree on the contribution each of them will make to the share capital and the share of the company they'll acquire. The new company shall then become the property of the shareholders in the proportion in which they have contributed to the share capital. The share capital of a limited liability company is not some deposit that cannot be drawn upon during the life of the company. On the contrary, it is the capital that the company can use for business immediately after its registration. For example, to purchase goods, equipment, and the like. A shareholder's contribution to the share capital represents the share of the shareholder in the share capital of the company. That is, the proportion in which the shareholder contributes to the share capital. For example, half of the share capital means the shareholder owns half of the company. This share may also be stated as a percentage, for example, 50% shareholding, and the business share represents the degree of participation of the shareholder in the decision-making of the company, as well as in other activities within the company, for example, in the distribution of the company's profits. Currently, it's not necessary to deposit capital contributions in an s.r.o. in a bank account if they're up to €5,000. It's sufficient to hand them over in cash to the administrator of the deposit before registration in the commercial register, of which the administrator will draw up a declaration. However, deposits above that amount must already be paid into a bank account. All deposits become the company's property after registration. The share capital of the company does not have to consist only of money, but may also consist of in-kind contributions of the shareholders. For example, a car, land, or a business. However, each non-monetary contribution must be valued by an expert in order for its value to be quoted in money. The limited liability that this form of company carries in its name does not apply to the LTD itself. Entrepreneurs often mistakenly believe that their company is liable or responsible for its debts only up to the amount of its share capital. And this is not true. An LTD is liable with all of its current assets. Liability for the company's debts is another matter. It concerns the shareholders, and that's where the aforementioned limitation of liability comes in. That is, how and when the shareholders are liable for the company's debts. Normally, partners are not liable or responsible for the company's obligations at all. This is the case when they have paid their deposits in full. However, if they've not paid their agreed contributions to the share capital in full at the outset, they're liable for the company's obligations, but only to a limited extent, namely to the extent of the outstanding contribution. Every limited liability company has two obligatory bodies: the managing director, who is the statutory body, and the General Assembly, which is its supreme body. In addition, the company may also form a supervisory board, but this is not mandatory. The shareholders decide on the company jointly. If they want to agree on something, they have to meet, and when they meet to exercise their powers, they form an ad hoc grouping called a General Assembly. This General Assembly is the supreme body of the company, and the shareholders decide on the most important corporate matters. The law prescribes that the shareholders should meet in this way at least once a year. A managing director is a different function from that of a shareholder. He's actually the top manager of the company and is chosen by the shareholders at a General Assembly. He or she is also accountable to them for how they manage their company and what results their company achieves. On behalf of the company, the managing director signs contracts, arranges deals, communicates with the authorities and partners, and exercises other powers. We say that he acts on behalf of the company externally. The managing director represents a kind of hands, feet, eyes, and ears of the company, since the company, as an artificial entity, has none of these. If there's more than one managing director, the shareholders shall determine in the Memorandum of Association whether they act jointly or separately. In the case of a one-person LTD, one and the same person holds two different functions: the function of managing director and the function of shareholder. Who can be a managing director? The managing director of a limited liability company can only be physical entities or people. They may be Slovak persons or foreign persons residing outside the territory of the Slovak Republic. However, foreigners are additionally required to have a residence permit in our territory unless they're nationals of EU or OECD countries. The managing director of an s.r.o. must be 18 years of age, have legal capacity, and be blameless. However, the managing director cannot be a person with an execution or a disqualified person, or disqualified from being a statutory body. None of this is examined in case of a foreign person. Who can be a shareholder? A shareholder of a company can be a physical entity or person, or a legal entity, a company, based in Slovakia or abroad. A residence permit is not required here. Unlike the position of managing director, a shareholder may also be a person who does not meet the requirements of 18 years of age, legal capacity, or integrity. However, a shareholder cannot have tax debts, Social Security debts, and cannot be subject to execution. Health insurance debt, unless it is in the process of execution, does not interfere. Again, none of this applies to a foreign person. The other two restrictions for shareholders have been in place for years. A one-person company cannot be the sole founder of another company. This doesn't mean that they can't be a company founder or a shareholder at all. They can, but only together with another partner. Therefore, this restriction only means that a single-person company cannot be a shareholder alone. The aim is to prevent the so-called chain of companies. A physical entity can be the sole partner in a maximum of 3 companies. Here as well, an individual can be a shareholder in an unlimited number of companies, but if they want to have more than 3 companies, then only together with another partner. An LTD may be established for business purposes or for any other purpose. If it's established for business purposes, it must have the appropriate business license. Such authorization is issued either by the Trade Licensing Authority in the case of a trade, for example, retail or wholesale activities, or by other authorities, for example, the Transport Authority in the case of taxi services, the National Bank of the Slovak Republic in the case of financial services, and so on. A limited liability company may have its registered office anywhere in the Slovak Republic. The condition is that it must prove ownership or use of the real estate where it will have its registered office, or the consent of the owner of the real estate. More about that in another video. Choosing a suitable business name is a whole science, although it may not look like it. One of the prerequisites for the successful registration of an LTD is its business name, which must not be identical to the business name already registered in the commercial register. However, that's not all. During the company's operation, its name cannot even be interchangeable with the business name of another entrepreneur, but that's a topic for another video. In the description of this video, you'll also find links to other videos on the operation of a limited liability company. For example, what taxes does an LTD pay? If you've enjoyed this video, click on like. And if you want to watch other interesting videos, click on the bell to subscribe.